Buenos días. Assalamu alaikum wa rahmatullahi wa barakatuh. I'm Gonzalo Rodriguez. I'm the STF director, and welcome to this new seminar entitled Retail Islamic Finance in Ireland, Obstacles and Opportunities. This session will try to analyze the current situation of the industry in Ireland, a country with around 63,000 of Muslim population, and the scope for improvement and opportunities and challenges that Islamic finance is facing in this jurisdiction. This seminar is organized by the Steve Casa Árabe Observatory of Islamic Finance in Spain, which is a group for analysis and consultation that gathers knowledge about current affairs in Islamic finance. It includes the main experts, consultancies, law firms, and banking institutions working in or specializing on this subject in Spain. Before I start, I would like to introduce very briefly our two institutions comprising the observatory. STIEF, the Saudi Spanish Center for Islamic Economics and Finance, was launched in 2009 and is a hub for research, teaching, applying, and promoting Islamic economics and finance. The center leveraged from the experience of its partners, the King Abdulaziz University in Saudi Arabia and IE University in Spain. Casa Árabe, or Beit al-Arabi, founded in 2006, is part of the general administration of the Spanish state and is operated as the strategic center for Spain relations with the Arab world. Let me now introduce our speakers today. Dr. Edana Richardson, thank you very much for joining us today. Dr. Edana Richardson is an assistant professor in law at Maynooth University in Ireland, having worked as a solicitor in the London and Abu Dhabi offices of an international law firm. As a solicitor, Dr. Richardson advised issuers and book runners on capital market instruments, including green bonds and sukuk. Dr. Richardson now lectures in Islamic finance law, company law, and capital markets law at undergraduate and postgraduate levels. She is a graduate of Trinity College Dublin, where she completed her undergraduate law degree 2006 and PhD in 2012. And the University of Cambridge, where she undertook a top master degree in 2007. Dr. Richardson's research interests include Islamic finance, capital market law, and sustainable finance. She has published in journals and edited collections, both nationally and outside Ireland, and speaks regularly at conferences on Islamic finance and responsible and sustainable finance. Thank you very much again for joining us today, and welcome. And our other speaker is Simon O'Neill from Philip Lee. Simon is a partner in Philip Lee banking and finance team, advising on all aspects of corporate banking, focusing on secured and unsecured lending transactions, property and project finance. Simon advises on the sale, acquisition, and management of loan and asset portfolios, debt restructuring, workout arrangements, and negotiations. Simon has extensive experience advising on and drafting facility and security documentation for financial institutions and borrower, and has advised corporates on funding agreements and the provision of security as collateral for regulatory or other funding shortfall arrangements, including under the Environmental Protection Agency scheme of financial provision for environmental liabilities. Simon has interest in the ethical finance sector and has advised a number of microfinance institutions and social lenders, and has expertise in relation to Islamic finance and Sharia compliant finance structures. Thank you very much, Simon, for joining us today. I'm very happy to have you both here in our seminar. And the structure of the seminar, as you know, we will have a short presentation from our speakers, from Simon and Edana, and then we will have a first reaction from Dr. Olivia Orozco, which is the coordinator, the Education and Economics coordinator at Casa Árabe. And then we will be more than happy to listen your question from the audience. That's the idea. So I now give the floor to Edana. And I think, Edana, you are going to share with us some kind of presentation, right, while you are talking?
Yes, yeah, I'll just pull up my slides now. Great. Can everybody see those?
Yes.
Yeah, okay, perfect. All right, thank you very much, Gonzalo. So as Gonzalo said, we're going to talk today about retail Islamic finance in Ireland, obstacles and opportunities. So the Islamic finance industry overlays principles derived from religious teachings with financial objectives and encompasses financial activity and institutions that have been structured to adhere to the financial principles of Islamic law. While a number of Muslim majority countries, such as Malaysia, have developed into active centers for Islamic finance, some countries without Muslim majority populations have implemented legislative or policy measures designed to facilitate the development of Islamic finance activity within their own domestic economies. Irish tax authorities and lawmakers have, for example, turned their attention to the Islamic finance market comparatively recently. In doing so, they've not sought to favour or to create a separate legal framework for this market. Instead, they've implemented an approach that seeks to accommodate certain Islamic finance products within Ireland's existing regulatory and taxation frameworks. However, while these accommodations suggest a receptive attitude to Islamic finance by the Irish government, some remaining legal and taxation hurdles could go some way towards explaining the so far relatively limited development of domestic Islamic finance in Ireland, particularly at a retail level. In practice, we've only really seen the development of Islamic finance in Ireland in a wholesale international context, most notably Islamic funds and sukuk. Today, we're going to look briefly at the Islamic mortgage alternative market in Ireland to consider its current position, as well as the possible future of domestic Islamic finance. I'll start by outlining the development of Islamic finance in Ireland, and we'll touch on the legislative and regulatory position of Islamic mortgage alternatives. Simon will then look to the future by considering what needs to be done to encourage a domestic Islamic finance market in Ireland. We've recently published a peer-reviewed article on this topic, which was published in the Conveyancer and Property Lawyer. It's also available to download on SSRN, a link for which is on the Philip Lee and Maynooth University websites, and you can always contact us directly for that link. So in April 2016, which was the date of the last census in Ireland, the Republic of Ireland's Muslim population was 63,443 people. This reflects a steady growth in this population. There were, for example, just 3,875 Muslims in Ireland in 1991. Since 2006, the number of Muslims in Ireland has nearly doubled, increasing by 95%. Making up 1.3% of the Irish population in 2016, Ireland's Muslim community remains a comparatively small sector of Irish society. Nevertheless, as a population that has seen steady growth over the last 20 years, Ireland's Muslim community now represents a distinct and identifiable segment of Irish society. Shaped by the financial principles of Islamic law, Islamic finance products and services offered around the world are structured to offer a financially viable alternative to conventional finance products, while still being structurally compatible with Islamic law. This has meant that where the legislative framework has not been designed or modified to support the legal forms that are specific to Islamic finance activity, Islamic finance transactions, institutions, and market participants may be taxed and regulated differently and often less favorably than their conventional counterparts. To accommodate the different legal forms used in Islamic finance transactions, the Irish government has introduced briefing notes and legislative accommodations designed to facilitate the offering of Islamic finance products within Ireland. The first such measure was published in October 2009, with the Irish Revenue Commissioners issuing of a tax briefing confirming the tax position in Ireland of certain Islamic finance products. Now, this briefing note didn't amend Irish tax law. Instead, it sought to explain and confirm the tax position of specific Islamic finance products. The tax briefing therefore confirmed that 3 Islamic finance products, takaful, or Islamic insurance, ijara, or Islamic leasing, and Islamic investment funds, will be subject to the same tax regime as their conventional alternatives. A year later, the Finance Act 2010 introduced amendments to Ireland's existing tax laws, the Taxes Consolidation Act and the Stamp Duty Consolidation Act. These amendments were designed to facilitate greater equality of tax treatment between certain conventional and Islamic finance products. Section 39 and Section 137 of the Finance Act 2010 deals with specified financial transactions and inserts new provisions into the Taxes Consolidation Act and the Stamp Duty Consolidation Act. Now, neither of these amendments refers to Islam or Islamic finance, although the Irish government has clearly confirmed that the aim of these legislative amendments is to extend tax treatment applicable to conventional finance transactions to Islamic finance products which achieve the same economic result in substance as comparable conventional products. As a result of these amendments, the structures commonly used in 3 Islamic finance transactions are now addressed in Irish tax law. Deposit transactions, which cover Islamic deposits, credit transactions covering a number of Islamic financing arrangements, and investment transactions covering sukuk or Islamic bonds. Minor clarifications to the specified financial transactions tax framework have been introduced in subsequent finance acts, although the scope of the accommodations have remained largely unchanged since 2010. So let's now look at one example of an Islamic finance product and see how it fits within Ireland's tax and regulatory frameworks, and that is the Islamic mortgage alternative. Islamic mortgage alternatives have been developed by the Islamic finance industry to provide an alternative to conventional interest-bearing mortgages. 3 basic structures for Islamic mortgage alternatives exist. The first is structured around a murabaha contract and involves a financial institution purchasing property and then immediately selling it to the customer for the original purchase price plus an agreed markup to be paid by the customer in installments. The second incorporates an ijara wa iktina contract involving the purchase of property by the financial institution that is then leased to the customer in return for payment of rent. The third is a structure based on a diminishing musharaka contract and involves ownership of property that is shared between the financial institution and the customer. The financial institution leases its share of the property to the customer in return for payment of rent and progressively sells its share of the property to the customer over the contractual term. Now, the legal form of each of these Islamic mortgage alternatives involves no loan of capital or payment of interest by the customer. Nevertheless, the ultimate economic effect of each Islamic mortgage alternative is consistent with a conventional interest-based mortgage and allows a customer to purchase property with the financial assistance of a financial institution. Following the amendments introduced by the Finance Act 2010, the Taxes Consolidation Act now provides for a number of credit transactions that are structurally similar to murabaha and diminishing musharaka-based Islamic mortgage alternatives. As a result, Part 8A of the Taxes Consolidation Act will now deem these credit transactions to have established a loan relationship between a financial institution and a customer. Effectively, Part 8A of the Taxes Consolidation Act seeks to align the taxation of certain Islamic and conventional property financing products. It does this by allowing the Islamic finance products to be taxed in a way that reflects their economic substance, that is, as alternatives to interest-based mortgages. As a result of deeming a loan relationship to exist where legally there is no such relationship, the periodic returns paid by the customer to the financial institution pursuant to a credit transaction will now be treated under Irish tax law as if they were interest paid on a loan. Effectively, the Finance Act amendments seek to bring credit transactions within the scope of existing rules applying to loans and interest, notwithstanding the fact that legally there is no loan and there is no interest. At the moment, the Finance Act amendments do not really provide for an accommodative tax regime for Islamic mortgage alternatives based on an ijara wa iktina structure. So the extent to which returns generated by those products will be treated for tax purposes as equivalent to interest is at the moment still unclear. The question of how an Islamic mortgage alternative and any financial institution that offers such products will be regulated in Ireland will depend on whether the product is considered to be a mortgage under existing legislative and guidance frameworks. In Ireland, the Land and Conveyancing Law Reform Act 2009 defines a mortgage as any charge or lien on property for securing money or money's worth. It goes on to restrict legal mortgages over property in Ireland to those created by means of a charge by deed on the land. Complementing this regime, consumer protection in the context of mortgages arises from the Consumer Credit Act and related soft law codes of conduct. In the case of Islamic mortgage alternatives based on a murabaha contract, bringing these financial structures within the regulatory regime applying to mortgages is actually relatively straightforward. As is the case for a conventional property financing transaction, murabaha-based arrangements allow the relevant property's title to be transferred to the customer almost immediately. The customer then repays the purchase price plus markup on a deferred installment basis. This structure allows the customer to grant a charge over the property in favor of the financial institution and to secure the amount payable by the customer under the transaction. In contrast, Islamic mortgage alternatives based on ijara wa iktina and diminishing musharaka contracts are potentially less straightforward from a regulatory perspective. In each structure, the property may not be transferred to the customer in full until the end of the financing term. This reduces scope for the customer to grant a charge over the property in favor of the financial institution. Other than in the case of structures based on a murabaha contract, therefore, Islamic mortgage alternatives risk not falling clearly within Ireland's existing property and consumer protection regimes for mortgages. As a result, these products could be categorized as leases, or at least as including a lease, rather than as housing loan mortgages. This would alter the protections offered to consumers participating in these Islamic financing transactions. So I'll now hand over to Simon, who's going to take you through the current position of Islamic finance in Ireland, and we'll look to the future and opportunities in that industry domestically.
Thanks, Adana, and lovely to be here today. So I'll bring you through maybe some of the difficulties, the opportunities, and maybe some comparison of the market. So as Adana has outlined, the Irish government have taken steps to introduce a supportive regime for Islamic finance in Ireland through the measures mentioned in the Finance Acts. And these amendments address the treatment of credit return, deposit return, and investment return on their respective credit transactions, deposit transactions, and sukuk transactions, which utilize Sharia compliant structures. The measures, however, do not address stamp duty treatment on the acquisition of property arising under murabaha or ijara structures, which, as described above, as compared to conventional mortgage products, involve two conveyances or transfers of the subject property. Firstly, its acquisition by the Islamic financial institution at day one, and secondly, the disposal of the property at the end of the contract term to the customer. Both conveyances or transfers will trigger a stamp duty liability based on the market value of the property at the relevant time. So for residential houses, the current stamp duty rates will be chargeable at 1% for transactions under $1 million and 2% for properties valued at over $1 million. This places Islamic mortgage structures at an inherent cost disadvantage to a conventional mortgage product, which would only involve a single stamp duty event. The opportunity to address the omission in the Finance Acts in respect to stamp duty treatment on property by way of a further legislative amendment was complicated recently by a legislative amendment introducing a stamp duty rate of 10%, applying to corporates which acquire 10 or more residential houses in aggregate in any 12-month period. This commenced on the 20th of May this year. The amendment was introduced in an effort to reduce bulk buying by institutional investors of residential homes, which were perceived to be crowding out individual purchasers, first-time buyers, and families from the market. And this could unintentionally disadvantage Sharia compliant structures as part of the Sharia compliance requirements in terms of structuring, means that the Islamic financial institution must have acquired the property either to sell it on under a murabaha structure or to grant the lease under an ijara structure to the customer. A further amendment introduced as a planning control measure permits local authorities to designate up to 50% of houses in new developments as being reserved for owner occupiers. And again, because of the Sharia structuring practices, this may inadvertently prejudice Sharia compliant structures where title to the properties will be held by the IFI rather than the owner occupier, particularly in an ijara situation. While it's not insurmountable in principle, there's a level of complexity associated with these issues, which would require considerable motivation to address from at both a political level and a legislative level. There's also introduced an element of commercial risk for an investor in launching any product or platform in order to be assured that the appropriate legislative amendments might be forthcoming to support the launch and further development of those product structures. In the meantime, however, the absence of any Sharia compliant alternative in Ireland is resulting in the financial exclusion of one of the fastest growing communities in Ireland, and in one in which we will, as we'll discuss later on, there's a considerable demand existing for those financial products. In terms of the market, the Muslim population in Ireland per the last census results was approximately 63,500. And one would have expected it to have grown substantially since then, being the 2016 statistics. The population is certainly not as large as it is in the UK, which was reported to be around 3 million in 2020. The UK as a market, the industry has evolved over 3 decades from its beginning in 1980 with Al Baraka International, and now numbers 5 fully Sharia compliant banks, 20 institutions offering Islamic financial services, and total Islamic financial assets recorded in 2016 of 6.9 billion sterling. And yet, a 2019 report undertaken by Gatehouse Bank in the UK around awareness and perception of Islamic finance showed that they'd only about a 40% penetration of the UK Muslim market. But however, I suppose notably, 85% of the users of Islamic financial products reporting that the use of these products exceeded their expectations. So clearly we can identify a benefit and a satisfaction level which I suppose anecdotally you wouldn't necessarily see being recorded in conventional financial product markets. In the UK in particular, the London real estate market has long been favoured by Middle East investors. And many of the prominent buildings in the London skyline have either been funded or acquired by Middle East investors utilising Islamic finance structures in recent years. Over the years, since the introduction of the Finance Acts, the Irish market has not to date generated any level of comparable interest, either from Middle East investors or institutions. This is possibly due to its historically smaller scale, but we have seen significant growth and development in the scale of commercial real estate, purpose-built student accommodation, and PRS markets in the main population centres of Dublin, Cork, Galway and Limerick in recent years. And with the occurrence of Brexit, the failure by English Islamic financial institutions historically to make use of what would have been an ease of access to the Irish market using EU passporting entitlements to offer Islamic financial products in Ireland, I think it's certainly an opportunity lost, and not necessarily straightforward to regain following Brexit. Possibly the perceived lack of scale, both in terms of the Muslim population and the high value or high profile trophy acquisitions, could be factors in the slow growth of the sector here. At one point, Ireland was cited in reports from the IMF and the ECB as being a highly supportive jurisdiction for Islamic finance and one of the high potential markets for growth in the EU. At one point, the ESB were reported to be targeting the first Sukuk issuance in Europe. The ESB are the Irish Electricity Supply Board and control the electricity network here. That's since been superseded by the UK's now landmark Sukuk issuance. More generally, in relation to the market here in Ireland, our Philip Lee Islamic Finance report undertaken in 2019 surveyed the demand within the Muslim community for Islamic finance products and identified significant demand within the community for a Sharia compliant financial product, an alternative. In terms of regulation, Idana has mentioned that the Finance Acts introduced equivalent treatment for some Sharia compliant structures, and that does not make reference to Sharia compliance or Islam or Sharia in its assessment of those structures, although the intent is clearly to address the substance of those structures. Ireland as a jurisdiction has been very successful as a jurisdiction for listing of Sukuk or Sharia compliant funds, and would be regarded as one of the leading jurisdictions amongst Nasdaq Dubai, the Luxembourg and the London stock exchanges in that regard. Ireland's strengths in this respect may possibly be more related to its successful IFSC infrastructure and reputation, the fund's expertise that is based here, and the ease of listing or the approval process for prospectuses, rather than any specific Islamic finance credentials. In terms of regulation and authorization, the process and regime would be the same for any Islamic product or financial institution seeking authorization. The central bank would consider any application in the same manner as a conventional institution seeking authorization, whether it be as a credit institution, a retail credit firm offering retail products, or an investment firm under MiFID. There is no specific dedicated or centralized Sharia supervisory regime for Islamic financial institutions, but rather the products will be subject to compliance with both European and Irish local law requirements in terms of consumer protection and conduct of business rules. This is in fact consistent with the approach in the UK, save perhaps the Bank of England is currently looking to support Islamic financial institutions through its development of its interbank liquidity management facility. But in substance, I don't believe that there are any regulatory obstacles which could not be overcome in a particular case in developing a Sharia compliant product. And in particular, it would be in an Islamic financial institution's interest and alignment of its objectives to comply with or to opt in to all relevant consumer protection measures in the market. Idana, if you don't mind, move it to the next slide. So in terms of the opportunities and the way forward, I suppose we'd see it as a market ripe for development. We spoke about the perception of the market in the previous slide, and at first principles, the opportunity presented for investors of a market with no existing operator or competitor and an eager, supply-starved customer base is obvious. The Philip Lee Islamic Finance Report was an attempt to seek to quantify the size of the market and the demand for Sharia compliant products in Ireland. Maybe just to take you through the responses to the survey and to demonstrate the issues around the pent-up supply. So there is no Sharia compliant alternative product available in Ireland. 81% of the respondents in Ireland to the survey were living in rented accommodation, despite having individual incomes in excess of €50,000 per annum on average. 98% of the respondents cited the lack of a compliant alternative product as the reason that they haven't purchased a home or an investment property. And 95% of respondents had an indicative budget of somewhere between 250,000 and 500,000 for a home, with the average mortgage required being approximately €275,000. 86% of the respondents expressed a desire to purchase a home or investment property. Amongst the respondents, only 15% had experience of financial products which were compliant with Islamic finance principles, and I suppose that's consistent with the market here insofar as the absence of any compliant product, and probably is consistent with maybe the use of such products in the UK or other jurisdictions. 33% of the respondents had felt they had no option but to use conventional financial products. But 98% of respondents stated that they would use alternative financial products which were compliant with Islamic finance principles in preference to a conventional loan if made available. And there was also a feedback that price would not affect their choice, and would be willing to pay a premium for the availability of a compliant mortgage alternative. So the findings of the report show both a demand and an awareness within the community of Islamic finance. And on an income qualified basis, the results pointed to a mortgage gap from the 400 respondents alone of a demand for 60 million euro for a mortgage product. Looking at the legal system and the growth of Islamic finance in the UK, given the success in the UK, Ireland is a natural secondary market for Islamic finance. In addition to being an English-speaking jurisdiction, its legal systems, both in terms of company law, property and landlord and tenant law, and financial regulation, has to date been highly similar and comparable to the UK. Even taking Brexit into account, there's still a high degree of comparability for investors and institutions who are familiar with the legal system, property transactions that they may have experienced or undertaken in the UK. And broadly speaking, there's a high degree of interoperability of documentation, processes, and portfolio management for institutions. To date, UK Islamic financial institutions have not considered the Irish market as part of their investment appetite. And following Brexit, this is further complicated at a retail level, having lost the benefit of EU passporting entitlements. Looking at values, culture, and sustainability, which are very much the focus of regulators, institutions, and investors at the moment, Islamic finance at its core seeks to assert ethical practices, positive customer outcomes, and to deliver social impact. These principles formed a key part of Islamic finance long before the popularity and focus on sustainable development goals and ESG came into vogue. Ethical values are embedded within Islamic financial institutions through the establishment of Sharia supervisory boards and internal governance systems to ensure compliance and adherence to Sharia principles and their values. These issues are ones that institutions are currently grappling with in the context of ethical treatment of customers, sustainability, the incorporation of climate risk and ESG risk at an institutional level. As I said, they are also specific agenda items for regulators, the board of directors, and also key issues for bank customers in choosing which bank to do business with. In Ireland, legacy issues flowing from the financial crisis have led to a number of recent announcements and the exit from the market of two significant retail banks. In addition, regulatory investigations by the Central Bank of Ireland have resulted in significant regulatory financial sanctions for failures in conduct. One such examination, the tracker mortgage examination, has resulted in fines of €82 million for a number of institutions across a number of financial institutions so far, and there are yet to be a number of investigations yet to be finalised. So that total is not fully settled at this point. And just to explain, this examination arose from the failure to offer appropriate mortgage rates by institutions to their customers in the context of mortgages, and as I say, have resulted in the largest, a series of the largest regulatory fines on financial institutions to date in Ireland. The strength of values and adherence to core principles and the reflection of the SDGs and their business model can be a significant advantage to IFIs, both from a governance and a customer reputation perspective, amongst not just the Muslim community in Ireland, but also more broadly the non-Muslim community here. Indeed, the growth and appeal of the customer base of both Al Rayyan Bank and Gatehouse Bank beyond the Muslim community has been widely observed and has been part of their success in the UK. Just on the next slide, Idana. So in terms of the prognosis and the opportunities, a potential Brexit bonus did not materialise in the context of UK Islamic financial institutions seeking to establish Irish subsidiary operations here to continue to avail of EU passporting rights. In fact, as we've noted, historically they never made use or made very limited use of those passporting rights when they were available. And this is potentially due to the singular focus on English real estate or the English market, or alternatively, the ability to structure transactions utilising other European institutions. But Brexit did not deliver that opportunity yet for the Irish market. And it is possible, given the similar legal system in Ireland, that this might materialise either on a bespoke transaction or for a particular institution that might choose to look at the Irish market. When you look at fintech, the increasing digitalization of financial services and payments is leading to a proliferation of Islamic financial institutions alongside conventional fintech firms. Ireland, like London, is a developing hub for fintech firms. The absence of EU passporting rights is a significant limitation factor for fintechs authorised and regulated in the UK. In comparison, authorisation in Ireland offers the opportunity to obtain valuable EU passporting rights for fintech companies. with the advantage of a very similar and stable regulatory environment here in Ireland. The Central Bank of Ireland has acknowledged the opportunity to rely to a certain extent on outsourcing, dual hatting, as part of a progressive business plan to build up Irish operations over a period of time in support of institutions' Brexit planning and Brexit contingency plans. This has already provided a boost to the Irish fintech sector, with a significant number of UK fintechs establishing operations here already and availing of that opportunity to outsource and dual hat and gradually build up their operations here in Ireland. The same opportunity will be available to Sharia compliant fintechs to scale up. The slide I've just showing there shows, and it's extracted from the IFN fintech landscape. Shows a number of fintechs across a number of sectors, be it alternative finance, crowdfunding, and the challenger bank sector, within the specifically the Muslim fintech market in the UK. And Authorization in Ireland offers a unique growth opportunity for those fintechs. By way of conclusion, I suppose what we would say is, on a bespoke specific transaction basis, there are ways and means to structure transactions in a Sharia compliant manner in order to mitigate these obstacles. From conversations we've had with institutions and investors and members of the community, we strongly believe that there's an opportunity both at a retail level to deliver a mortgage solution, but also to deliver solutions for larger bespoke commercial real estate or other investment transactions. And with an innovative approach and the right combination of factors, it should be possible to mitigate many of those obstacles and to deliver a Sharia compliant alternative. Thank you.
Thank you very much, Simon. I think now Olivia will have the floor with some reflection.
Thank you very much, Gonzalo, and thank you, Simon and Idana, for such an interesting presentation. I think it has been very clear. I'm personally really thankful for the information you have shared with us. And it really fits very well with the work we have been following up from the Observatory of Islamic Finance in Spain that we, Casa, Árabe, and the STF have created some years ago. And because let me just lead it to just a comment and to lead them to some questions to dynamize the debate and open the questions later. So just to frame it, we have been really following up what was happening in some European countries, in the sense that we are looking for success stories in a way, or how to do it, or how to learn to do the right thing in a way for the Spanish cases, no? Because we're following very closely the case of UK, of course, because as you know, is them. We could say is the Islamic Finance Hub in Europe, but also after the Brexit, the different options that were open. No, once the front, we had some events also on Islamic Finance in Luxembourg. We were following up also the French case. So this roundtable on the Irish case really works very well to give us a picture of alternatives, some way of doing it. No, so in that sense. Because we knew about the, as you mentioned, I mean, the experience of Ireland, and in terms of Islamic funds especially, was more well known. But the case of the mortgages is really interesting because it's very similar, I think. And in that sense, I would like to raise some commonality if you want, or tell us more about it. Because in Spain, for the moment, we had no. Even if we had, we have raised that there's some interest from different parts, no? But especially, as you mentioned, you have a small Muslim community in comparison in Ireland, and in Spain we have a bigger one. It still is not comparable with the Muslim communities in France or in UK, but it's still, in the last year we have received, and there has been a lot of interest from within the Muslim community in Spain to develop certain products. So if we, in that sense, apart from more the investment part of the Islamic funds, or I mean, there is kind of more kind of demand from the community itself. And also for me, that's very interesting to see that in Ireland, it seems that it has been a demand, and in that sense, it's kind of bottom-up phenomenon. No, it's the demand from the community which is creating the phenomena or the development of these kind of services within Ireland. So in that sense, I would like to ask if you may, if you can explain a bit more what kind of demand is there, or how has been articulated, or how this has created the market, no, in that sense. So if there has been the organization in certain communities, or the approach, because we have similar cases in Spain within the Muslim community, which are trying to approach certain financial institutions to see how we could offer Islamic products, or especially in the real estate and mortgage area, no? So if you could explain us a bit more how the process has been created from the demand part. And also I would like to ask you which, because you mentioned this product that has been included within the taxation regulation, no, to offer the Islamic finance products. So which, especially in the retail market, no, for especially for mortgages. So which kind of financial institutions are the ones offering these products in Ireland? Are they conventional banks with Islamic windows, or are they Islamic banks in Ireland? Because that's also one of the issues we have been dealing with in the Observatory of Islamic Finance in Spain. It's like, kind of, do we need an Islamic bank to offer them, or it's enough to start little by little, like it seems? Because for what I see in Ireland has started kind of step by step, a little by little, no? I mean, with the changes in the regulation on taxation from these products, and little by little it seems that is facilitating the development of these products in the country. So it will be, it's enough, or how are they, which in particular, which financial institutions are offering these products? And just to think of also alternatives that could be used for the Spanish case. And then when I have a question that I don't know, I mean, it's interesting to see how the issue of double taxation is solved by considering the Islamic finance products like, you know, as a loan, even if it's not a loan, no? So I don't know how, if that has raised any questions within even the community of Muslims expert there. And maybe I'm raising this question more for the audience, because I see that we have some expert on Islamic finance. If they could think that they will, I mean, in principle, is positive, it's an advantage, because it's offering a better deal in taxation, in the taxation treatment for the Islamic finance products. But I don't know if this raises any question that is really considering them as a loan, which is kind of a bit kind of contradictory in a way. And then about the Brexit is very interesting, but it seems, if I understood, there is no impact for the moment. Maybe we have to wait a bit more, as Simon said. Then the last question for the fintech, which is also some issue that especially Gonzalo has been working on it, and then we have been following up. Also because after with the pandemic has been one important development, no, all around the world, how technology is helping also to bring and also to increase in financial inclusion, which is another dimension that I think is very positive that you mentioned, because it's one of the key issues that we have been dealing also, because that's one of the main objectives, not to try to include certain sectors of the population that has been excluded from the financial system. So in that second one, you mentioned, Simon, about the possibility of fintech to scale up after the Brexit, and now when some firms are moving from UK to Ireland, if I understood well. when you speak about scaling up, I guess is within the Irish market, no? Or are you thinking internationally as well? Just to start with that, if you want, and then we can open up to other questions from the audience. Thanks a lot for your intervention.
Shall we break that down? Shall we share those points, Simon? Will I take
Sure.
the taxation and the interest, the talking about the community interest, and if you wanted to look at Brexit scaling up and your experience more recently of the
Sure.
the market? Yeah, I can kick off. Just in terms of Olivia, you were talking about, sort of deeming it to be interest and whether there's issues with that. And that is the approach that they take in the UK as well, because that's, they're not saying it is interest, they're just saying because it is economically comparable to it. And if we want to ensure equality of treatment between conventional and economically comparable Islamic products, we simply deem it to be comparable to interest and therefore bring it in. So they're not saying these are mortgages, and they're not saying these are loans, and they're not saying this is interest, but they're saying that economically it has the same impact and the same economic effect. And so we will ensure equality of treatment by simply deeming it to be that. So it's basically a way of kind of bringing it into the fold without saying this is a mortgage. Because I think, some countries, particularly for regulatory points of view, they just say this is a mortgage. And I think there's probably more problems with saying it's a mortgage than saying we're just deeming it to be interest. And they say it's mortgage and it's interest, but legally it's not. And so it's probably more problematic to say that it is rather than to simply deem it to be that. But obviously very interested to get people's views on that. And then I think in terms of the interest, it's interesting because Simon was talking about how Philip Lee had this really interesting survey of the market, and they went out and they got the community's views. 10 years earlier, I did a similar thing. So I went out to the community in 2010. And it's interesting because we got very similar feedback. I think you'll agree, Simon, like the feedback has been consistent over that time. Almost like the number, the only real difference, I think, in the feedback from my survey in 2010 and Simon's survey in 2019 was the understanding of Islamic products has gone up and kind of awareness of them. Whereas in 2009, a lot of people weren't even aware that this was in existence. There was an interest in it, but they didn't really, there wasn't that kind of understanding that the market was there. Whereas from Simon's survey, I think we really got the sense, the Philip Lee survey, you really got the sense that people are very aware of this. People are very knowledgeable about it. And the interest is still there. So I thought that was really interesting that over the course of 10 years, the interest has stayed. But at the moment, none of these products aren't being offered by banks. That it's the tax framework, the accommodative tax framework is there, but we're not seeing domestic banks or international banks starting to come into the market. It's there in the legislation, but we're not seeing it come through in practice. And Simon, you might be able to maybe talk a bit more about that.
Yeah, so there is, as Diana said, there's no Islamic financial institution, there's no Islamic window available. So there is no product available in Ireland to offer a mortgage alternative. We've at various times I've had discussions with representatives in the Islamic institutions in the UK in terms of potential either potential transactions or potential wider potential generally arising from the survey, and the focus is entirely on the English real estate market, on the basis that they still have a significant amount of the market there left to penetrate. I suppose one of the reasons we did the survey was to try and pull together the the demand and to demonstrate the opportunity and the finance gap that exists in the market. The community itself is maybe a little bit fragmented in terms of how they might, the demand is there, but there isn't, call it, sort of a community organization looking to drive that sort of that policy change, but on an individual basis, we would get calls on or emails and inquiries on a weekly basis from people looking for updates. Is there a mortgage alternative? And that is, people are actively searching for solutions, whether it be sort of Googling or internet searches. They're actively looking for a platform to offer a mortgage alternative. And part of the benefit, and you've seen it in the UK in terms of its appeal to the non-Muslim community, there is a crossover opportunity. So it's not just the Muslim community, it's the wider community, and there is sort of unique benefits with an Ijara structure, which might appeal specifically to a segment of the non-Muslim community in terms of financing a home purchase. So we would see that opportunity as being far wider than just the pure Muslim community in Ireland. I see there's a couple of questions in the chat as well, or in terms around sort of passporting and so on. The advantage of Ireland as a jurisdiction means that once you're authorised in Ireland, you are entitled to avail of the EU passporting entitlement, which allows you to offer services on a cross-border basis in any of the other EU jurisdictions. So that is one of the particular benefits, whether it be as a mortgage platform or as in the context of fintech services. So that is sort of distinct benefit, and the crossover from the UK to Ireland is possibly simpler than crossover to another EU jurisdiction, given that your documentation will be highly comparable, and with some local law and consumer law amendments. So that was they were really the points I think that I had. If there's anything I haven't covered, do let me know.
Thank you, Simon.
Yeah, thank you very much.
I think, well, it's very interesting for us to see that the findings of the Philip Lee report and the two surveys in 2010 and 2019 show that there's a high demand and a high awareness of the Islamic finance products in Ireland. So I think that would be key, the political initiative, right? This is one of the pain points.
Yes. So obviously for a retail mortgage structure, the stamp duty is your is one obstacle that hasn't been tackled. As it stands, it's for a property under 1 million, it's a 1% stamp duty charge. So that is, whilst it's still a cost disadvantage to a Sharia compliant structure on a 300,000, 400,000 home, it's not an insurmountable cost in the overall scheme of it, particularly where your otherwise unable to source a mortgage. But that's not to say that it's acceptable or appropriate that a Sharia compliant structure should pay an additional stamp duty cost as against a conventional mortgage. It would all depend on the structure and the scale of the platform that you deliver. We've had various inquiries over the years, and particularly in more recent times, and we've looked at all sorts of alternatives. We did design a structure for a microfinance, a social lender, approximately 3 years ago for the community sector to deliver loans, and we were able to design a very bespoke structure, has to be said, where the stamp duty liability was minimized. So that was, as I say, a bespoke solution delivered for a bespoke set of circumstances. But just to clarify as well, that wouldn't make a mortgage available. It was a very narrow, specific structure for the community sector. But there are always avenues, and again, depending on the scale, if you're looking to launch a fund which is going to deliver a market-leading initial solution, there may be a willingness to absorb or to incorporate maybe novel structures, or maybe a layer of that additional cost to prove as a proof of concept, and also to prove the demand that's there and the opportunity for the wider market, and which would provide obviously a basis to look for a sound and concrete basis to look for legislative amendment.
Okay. We have some questions from the audience. I don't know if you can read it. Xavier Nova asked if there is any Islamic bank entity in Ireland currently, like Al Rayyan in UK.
No.
There's no, okay. And Jusra asked, do these Islamic banks follow either AOFI or IFSB accounting standards, and do they have any centralized regulatory authority?
Yes, so there's no centralized Sharia supervisory structure in Ireland or the UK for that matter. And my understanding is Islamic banks do follow AOFI and IFSB standards, but obviously that's
as far as
not a feature of the Irish market here yet.
Yeah, they must follow those standards as Islamic banks. And for Idana, Mr. Dr. Kalim from Saudi, he asked, if sorry, I
think to elaborate on the Finance Act.
Yes.
Yeah, so sure. So the Finance Act effectively inserted new products into the Taxes Consolidation Act, which is the sort of the overarching umbrella tax legislation in Ireland. So it in the same way that they've done in the UK, it effectively put in a new section into that dealing with specified financial transactions. And it then went through the structure of these specified financial transactions. So it never refers to murabaha or musharaka or anything like that. But if you work through the definition of these transactions, you can see that they've been designed to align with the structures commonly used in different Islamic finance, so sukuk and murabaha and that kind of stuff, and Islamic deposits. So what the Finance Act effectively did was acknowledge a new finance product in Ireland that it then put into the Taxes Consolidation Act, with the intention that it would then be treated for tax purposes in the same way as comparable conventional products.
And Simon, for you, Is any Irish bank offering Islamic mortgages? I think you have already answered that. There's no. Can Irish registered financial firm offer its services everywhere in Europe?
Yes, no. So that's the passporting entitlements, and so once you're authorised in an EU jurisdiction, you're entitled to offer your services and products on a cross-border basis across the rest of the EU. So that is one of the benefits of EU membership, and I suppose is one of the recurring issues that Brexit is bringing into the headlines.
And there's also one final question from Orville Farrell. I don't know, this is maybe about the survey or your view. You can read it, Simon?
Yeah, so I think it's more maybe a fragmentation, and I think of the community rather than, and it possibly flows from the financial exclusion that is a factor in the Irish market because of the lack of availability of products. It it maybe leads to a sense of exclusion within the community. There obviously is sort of across the world, across the Muslim world, a sense that that these structures need to satisfy not just the letter but also the intent of the Sharia principles in terms of how they're implemented, and that they're not simply a sort of a replication, if you like, of a conventional financial transaction. So there is always that concern that that it's not a genuine structure. The Murabaha and the Ijara structures are substantially accepted, and ultimately it is a case of how they're implemented, and that they're subject to Sharia inspection and certification as well. So there is that process of development, but hopefully I've sort of covered the secrecy point. But if there's another question in that, I'm happy to address it further.
Olivia.
Yeah, if I may, I would like to follow up from the point that Gonzalo made about the role played by the government support in that sense, because that's something we have been also seeing in other cases, how it's important. I mean, the demand is clear now to have certain demand from the population, but also you need to have certain governmental support to give the final push, especially in the issue of changing certain or kind of adapting the regulation, as you mentioned. No? So in that sense, I would like to know. When I think it's clear we have to, if you have to give us an advice for the Spanish case, I guess it will be to go on or to try to adapt the regulation, especially in the issue of the double taxation, and then see how the demand responds now, or how there's certain reaction within the financial institutions to respond to that demand using those instruments. But apart of that, I would be very interested if you could say, I mean, to what the government support in Ireland responds to. I mean, is it, because you mentioned that it has been a kind of learning process, at least that has been reflecting the population about the Islamic finance products in the country. No, did it happen also in the part of the governmental agencies and bodies, or the government has been also been more interested? Have you seen that it has been a progression in the interest from the part of the government into the market? And then these changes in the regulation and the governmental support, do they respond to the experience that Ireland had on Islamic finance funds, or is it that they have been observing the growing the potential it has among the population or the community, then they think it would be important to tackle that issue for financial inclusion and other purposes. So it just also to try to make the parallelism with the Spanish case and how to will be the good way of proceeding. Thank you.
Right, Tatiana.
Sure. I think I would just start by saying, I think in order for these kind of accommodations to work, the government having kind of an interest in it isn't enough. They need to take it like a very holistic approach to it, because it's not just making one amendment to the tax framework, because this, like mortgages and conventional products, there's so many implications of it that I think in order for it to work in a non-Muslim country that hasn't got specific laws for it, you need that holistic approach to it, where you're thinking of all of the implications that come out of that product, not just making one tweak in the tax law. That's a very good step, and that shows an interest in it, but it needs to go further than that. And Simon, I don't know if you agree with that.
Yes, and I suppose we've looked at the taxation issues extensively. We've spoken with, presented the findings of the report, but there is this case of the government most recently updated their Islamic finance guidance, the tax guide, in, I think it was 2020 or 2019. So there has been there has been some focus on this since 2010 when the Finance Act came in, and I think certainly there's been an element of sustainability and green finance, maybe sort of taking some of the focus away from Islamic finance, but I think there is certainly an element of, does the market lead the government input, or does the government input lead the market? And I think where we are, it's possibly the market leading the government to demonstrate both the demand and the opportunity. And I mentioned some of the regulatory investigations into some of the conventional banks and some of their treatment that has been identified in relation to customers and culture and so on. I mentioned the exit of two significant retail banks, Ulster Bank and KBC, from the Irish banking landscape. They would have been significant retail mortgage providers within the market. So we're now left with it's a much smaller pool of mortgage providers than it would be in the UK or possibly the Spanish market. Bank of Ireland, AIB, Permanent TSB, and a few other smaller providers. That is the core mortgage product, mortgage providers that are there available in the market. The opportunity for a ethical, an alternative solution in the market has appealed way beyond the Muslim community, in my view.
Thank you very much. I think we are out of time. I don't know if Olivia has any final remarks, but for us it has been very, very interesting to see that the Irish market is challenging but promising for Islamic finance, and also that the Irish government has been following the development of the Sharia compliant products and the Islamic finance market somehow. So we will be following all the developments in Ireland. And Olivia, I don't know if you have any final remarks.
Well, there are two questions, last questions. I don't know if we want to answer them or.
Okay.
So maybe let me just read it, because I think it will be good to read them for the audience that. because Kalim also asked that since 2010, even after the favorable amendments, if there are no offers of alternative mortgages, that means there is no interest from supplier, no demand from customers. So he's asking where is then the problem? And in that sense, it will leave me what will be my final question, which is if there will be any further development in the coming years, where do you see it coming, or what do you think will be the next development in that sense? Then Orville Farrell also asked, I understand that, but I understand that knowledge is power, and it appears that the products being offered are not given exposure like AIB products or Bank of Ireland products. And for it to work, it's more than a government that need to change or adapt to the Islamic culture, but the Islamic products needing to show openness through advertising. Would you agree? That's the issue of also we saw it in other countries and on the round tables, the importance of really kind of not so much advertising, but kind of working the knowledge on the knowledge about the population about these products. So I don't know if you want to answer these questions about what is the problem then if there have not been mortgages developed for supplier, no demand from customers, and then the issue of about advertising more these products.
Yeah, look, I think this is the age-old question. It's one of the reasons we actually undertook the survey to actually demonstrate the demand that is there in the community. You can see the appeal beyond it that's been demonstrated in the English market, and so you know the demand is there. You can feel it within the community. I think maybe the community are not the best in actually expressing that demand or sort of demanding a solution because of possibly the fragmentation that I mentioned. But I suppose one of the possibilities was to demonstrate the demand through the survey and the finance gap, which would attract the attention of investors or an Islamic bank in the UK. We've had discussions around the survey with a number of the banks, and again, it is this issue that they fully haven't exhausted the opportunity in the English market, and until they have the task of broadening out your market is possibly sort of premature to them in that sense. But yeah, I certainly the messaging that we get from the community and is that there is a demand, and we've sought to try and quantify that and express that in the survey results.
For the second point, I mean, I certainly think that there's definitely there's definitely going to be an education sort of point to if Islamic finance is offered, certainly within Ireland, there is going to need to be that real effort at educating the community and the society more generally as to what these products are. They're so unusual, like they're not your sort of standard mortgage. So they've certainly done that in the UK. Al Ryan Bank feels a little much more like just a high street bank in the UK because of they've made that effort for the education portion. And certainly I think if Islamic finance is to be offered domestically in Ireland, there will need to be an effort to basically explain what these products are and to show how they work. But it kind of, you almost need the products to be the banks to start offering them before you get to that point, I would say.
I'd agree with that.
Excellent. Olivia, do you want to make any?
No, thank you very much, Joseph.
Okay, so thank you, Simon. Thank you, Idana. Has been a real pleasure to be with you today, and we look forward to continue our collaboration. And as I said before, the recording, you are welcome to Madrid whenever you want. Okay, so thank you very much to all.
Thanks, everyone.
Thank you now.
Okay.
Bye-bye.
Bye-bye.
That's